You are crushing it in the commercial real estate space. I'm your host, Sierra Hoffman, and on today's call, we have Crystal DeBoer of Live Oak Capital. Crystal, thank you so much for being on the show today.
Thank you for having me, Sierra. Excited to be here.
Awesome. So as usual, I always like to start off by knowing more about your story, your background. So what did you do before commercial real estate and how did you get into it?
Sure. Okay. Well, I have always been in the real estate space. I grew up with a dad who bought single family homes and introduced me to how real estate and rental properties worked early in my teen years, and then did more residential real estate and stayed in the residential side of it for the majority of my 20s and 30s. And then I started seeing the potential with multifamily and also self-storage facilities. And I had a mentor that kind of brought me along and said, hey, you can do this. You would be great at this. You should start, and you should start now. Like, you should have started yesterday, but you need to start today. And so that began a 9-month kind of journey of learning the industry, learning the lingo, learning what NOI meant, what net operating income, what the different gross revenue, net revenue, how to calculate how much to pay for properties, how to talk to brokers, how to find deals, what was a deal, that kind of thing. And so I just started with a lot of education and learning the industry, and also actively looking for a property and looking for my first property. And 9 months later, I closed on my first 42 unit up in Indiana. And that was the beginning of my journey. And that was a little over 3 years ago. So I've been, in the grand scheme of life, relatively new, and a lot happening in the last 3 years. Now I am a part of 4 different apartment buildings, and I have 5 self-storage facilities. And so that I am either an asset manager for those or a operator, partner, owner, all of those things.
Awesome. All right. So you've been in real estate, single family space for a long time. So about, 25 years. It says here in your bio that you've been in real estate itself, and then until you met your mentor. So tell me more about how you met that person. Was it like a lot of people that I interview, they meet a mentor, they pay for that. Did you have to pay into the mentorship, or was it someone you knew that just kind of took you along there under their wing?
Great question. So yes, mentorship is usually a paid situation. And now I am a part of a great group called the My First Million in Multifamily Deal Room, where it is a paid subscription every month for people to learn. I was fortunate enough that it actually was my brother. So it was a close person that had been already doing it. And he's the founder of My First Million in Multifamily, Jennings Smith. So I think he may have been on with you before, but don't know. But anyway, he's been on a lot. Yes. So that's my brother. And so he reached out, and he did get to be a part of my first property. So he's part ownership. So I guess I paid him back that way at the end. But up front, I was blessed in that I did not. But yes, usually you are. And I do always tell people, it's like, if you really are serious about this, you do need to be able to and be willing to invest in your education, invest in making those networking meetings, getting connected, because especially in commercial real estate, it's so much bigger than each individual person. Like, you can tread water and you can make progress in the single family space. But if you're really going to do commercial, you need to find your people, find your circle, find your network of who's got the capital, who's good at raising money, who's good at finding deals, who's good at operating properties, who's good at bringing properties back from the brink of disaster and just crisis management. All of those things are really important to have on your team. And so, yes, so that's but that's what happened for me.
Awesome. Well, I didn't know Jennings was your brother.
Yes.
So
yes.
I love that. Awesome. Yes. Awesome connection. Yes. And we did interview him towards the end of last year as well. So that for anyone who's listening, if they want to listen over to Jennings Smith podcast as well. So right now you're involved in 4 apartment buildings and 5 self-storage. I do want to talk about self-storage because we don't have a lot of information on that on our podcast yet. And that is something that I think myself and probably a lot of our listeners would be interested in. It seems like a very passive, more so than apartments, right? Because there's not much maintenance involved in self storage.
Right.
So, what's your experience of getting into that type of asset?
Yes. So I was apartment heavy in the beginning, and then the more I did self storage, so I kind of fell into self storage not by accident, but just kind of by accident. So we had a property that my partner had found, had negotiated, and I was brought in as the asset manager to just make sure the property, because we had a very aggressive business plan where we were going to add parking spaces. We were going to take a rent roll from $9,000 to $15,000 up a month in a span of like 12 months. And so we had to really keep our eye on the prize and the goal. And so that was my job. And I learned a lot operating that property, and we had some missteps and we had some scary moments. And then now we are sitting at very consistently collecting between $15,000 and $16,000 a month, 18 months later. So very, very grateful. So that was my first property. And that got me very, like, I was operating apartments and I was also operating self-storage. And so self-storage is different. It's a different animal than multifamily. The numbers are kind of similar, but it operates with a much less expense ratio. So, in multifamily, you're looking at 40 to 50% just out the gate with your expense ratio. Whenever you're underwriting, you're going to want to, underwrite with that expense ratio, where with self-storage, you're going to underwrite more like a 35% expense ratio. Like nationally, that's what that expense ratio is. So right off the bat, you already have less expenses, and you're dealing with a tenant base that is just storing things or storing a boat or storing RV. And so you're not dealing with, you're not dealing with the emergencies that come with multifamily, which even if you're not the property manager, which I'm not the property manager on any of my properties, you're still like hearing about it from your property managers. You're still dealing with, we had somebody, that had a toilet go out in the middle of the night. Anyway, there's just stuff that happens, and it is a lot more drama. Yeah. I always say like self-storage is much less drama than the apartment buildings, and which I do appreciate. Also, it's a lot easier to, if you do have a non-paying person, that, tenant, it's much easier to get them out more quickly. There's not, again, the drama around it. You're not evicting a person or a family. It's it's items. And so, and most of it at that point, they've abandoned it. So there's not really any, it's very easy to evict. It varies from state to state, and you have to look into what your state's requirements are. But usually it's sending a certified letter, waiting an allotted amount of time, and running an ad in a newspaper, and then it goes to auction. So it's very straightforward and simple. And and last year we only had one, we have 170 units out there, and there was one that had to happen. So it's like, whew, that's great. Where I much more evictions with apartments. So yeah, so it's really a great asset. It's also very recession proof, which multifamily is as well. But whenever you have people either downsizing, but they don't want to get rid of their stuff, or people are just moving, and people that are moving from houses into apartments, they need a place to store because they're hoping that in a year their circumstances change and they don't want to get rid of stuff, and those kinds of things. So it is historically very recession proof, which is always what we're looking for right now. And so once I kind of got my feet wet and learned how much I liked self-storage, and how once you learn the basics and learn the in and outs and kind of overcame some hurdles, it was like, yeah, I could do this again and again and again and again. And so, so that's where I worked on getting the next 4 facilities with another partner. And those are all in the stabilization process, where you're trying to find the undervalued facilities that are mom and pop, that are not well run, that are not automated, not online, and go in and make them. So like right now we're in the process of putting up 3 new security gates, new fencing, just a lot of CapEx to kind of get these facilities of higher caliber, more secure, so that we can charge more rent and can cause those to bring in more money. So that's why I do like self-storage. I do. The margins are, it's like you're getting $50 for a unit versus $500 for apartments. So you need a lot more units. And that's the tricky part. Multifamily, it's, you get a $20,000 rent roll pretty easily from a 42 unit, 20 to 30,000 easily, where 42 units with self-storage you're not going to get anywhere near that. You need 400 to 500. So that's where it's not equal. Like one unit of self-storage is like multifamily. So multifamily is more profitable in that way, but you just have to get more. That's the thing. You just have to get a lot more self-storage to more get units. The same cash flow.
So at this point, do you prefer self-storage over multifamily, or are you still trying to acquire both?
I like to be in both. I think both are producing, we're all about those different streams of income and different assets. And I don't think I want to go all self-storage or all multifamily. I like having a diverse portfolio. So, but I am actively looking for self-storage, I would say, more than multifamily right now with the market that we're in.
Got it. Yeah. Speaking of the market, I think everyone's kind of have at the back of their minds, everyone's thinking, okay, we're going to be heading into a recession this year. So, what are you and your team doing right now to prepare for that recession? I heard you say self-storage is kind of one aspect of it. Is there anything else that you're doing?
Yeah, well, we are just working really hard on occupancy to make sure that our occupancies are really solid. Like right now, we're still in stabilization where 3 of the facilities we bought were, very low occupancy, like in the 60 to 70% range. So we are working aggressively to get into the 90s. So we're offering 1 month free rent, just to because once you get someone in, they usually don't move out for a year at least with self-storage. So we're working really aggressively to get all of our occupancies really strong. Then we are kind of maintaining our rates. We're not pushing our rates real, we're just, if we can just get our occupancy and we can get what we need to, that's where we're staying. We're not doing super aggressive pushes. We don't want people moving out of our facility and moving into another one that is $5 cheaper. We just don't want to do that. So we're leading up to this year. I would say we were every 6 months, there was increases just because of inflation and everything else. And we were getting it no problem, but we're kind of seeing that stagnate a little bit. Even though inflation is still what it is, but people are feeling it in every area. And we don't want to be the thing that gets cut out of their monthly budget, we don't need that. Let's get rid of that. So, trying to make it affordable, trying to make it easy, the barrier to entry to get into that unit easy. Same with multifamily. We're stabilizing our rents. Our rents are already, we're working on occupancy and just maintaining our rents, not pushing rents. And also just making sure that we have very good debt in place that is not high interest rates, which, thankfully we don't have, we weren't fish over. You don't want to be a fish in a barrel, and we're trying to make sure that we're not having to refinance within the next 12 months. We're trying to make sure that, or we have different options. If we are coming up on a refinance, well, could we get supplemental debt? Could we just put in like an extra loan at a higher interest rate and keep our big loan at the 2 to 3% that we got 2 years ago? Trying to keep those loans in place that are good, only refinancing when necessary, that kind of thing. We're just trying to be very, very careful with what terms we're getting with all of our properties.
Got it. And so you mentioned 1 month free rent. Is that just for the self-storage, or are you doing that for your multifamily as well?
Yes, it is the self-storage. However, at some of our apartments, we are doing like half the security deposit and our full security deposit, but half month's rent, so they don't have to come up with as much change at the beginning. So we are doing those kind of promotionals. We're doing kind of whatever it takes to get good people and high occupancy, because we do not want to be, that's what will hurt. When you have a recession, it's like you've already got certain people in there on a year lease. And so you're going to ride that year out. But it's like, if you all of a sudden have 10 units come open, that's not good. So we're trying to get people in good leases, 12-month leases at good rates and whatever. And as long as they're stable and, have been vetted, we're working with them to get them in, making it not so hard to come up with, $2,000 off the bat. So yeah.
Got it. All right. And then, so you mentioned that you're involved in the asset management side of the deals. Is that where your main strength and focus is on? Or are you involved in acquisitions as well?
Yeah. So that's a great question. I have done a little bit of everything. So I love that to know all of it. However, now that I've done it all, I have acquired, I have done the asset management. I do enjoy asset management a lot, but I also enjoy capital raising. So that's what I do a lot of for the properties that I'm on the team is I work with educating investors in how does this work? What are the returns? What does it look like to invest with us? That kind of thing. And so I do a lot of capital raising where people that truly want passive income, because we all know, all of us that are in commercial real estate know that it is not passive income. It is hard work income. And for those of us that are actually operating these properties now, the truly passive income is for those people that want to invest 50,000. They want to invest 100,000 and they just want to set it and be done and get their preferred returns, their quarterly checks, that kind of thing. And so that is also what I really enjoy because I love people. I love helping them set themselves up, helping their children, get set up for generational wealth. So that is also where I've kind of landed over the last couple of years, realizing that is a skill set that I have, that I love talking to people and getting them involved in our properties in a way that's not stressful for them. We'll take the stress. They can take the passive income at this point. So mine will be in a couple of years. So yeah, we're still in the hard work part of it, which is fine.
Yeah. Love it. So I think that's a good strategy to kind of try out every single bucket in the beginning because you don't know what you're going to like. You don't know if you're going to be better in asset management or acquisitions or, investor relations. So in the beginning, you probably want to try a little bit of each and then kind of find where you shine the most. And it sounds like you have found that. So as far as what you do normally on a daily basis, what is your schedule usually look like as an investor?
Yeah, that's a great question. It is different every day, but I mean, a lot of it is, the investor relations and the asset management kind of go hand in hand because when you are putting people's money into projects, you are taking on a ton of, I just feel all of that responsibility very personally. And so it's like, I want to have my hands in that asset management to make sure that we're hitting our numbers, we're hitting our KPIs, we're not falling behind. We're not going to be looking at each other like, oh, what happened? And so a lot of my day is, it's a lot of emails, a lot of checking it. Like I have, weekly calls with all of my property managers on all of my properties. I have back-to-back calls. Usually Thursdays and Tuesdays are my days that are conference calls with all of my people that are like boots on the ground. And so I'm checking in with them weekly on how's the property doing, where are our pain points, what do we need to do, what's working, what's not working. So I'm on the phone a lot, I'm on the computer a lot, and also then like visiting facilities too, and visiting the properties and seeing how they're doing. Some are local, some are not. So some are more and some are less, but I have, love to see the properties as well. And, at this point, I'm not in the acquisition as much. I'm not like looking for deals and looking for that. I have other people that I'm connected with that are doing that and bringing those to me when they get found. So I'm not, but I used to do a lot of talking to brokers and a lot of emailing brokers and a lot of broker relations too. So I do, I will still hear from them occasionally and text and phone. And so I'll keep up with that. So yeah, I mean, just a lot of communications and putting out fires and figuring out what needs to happen to get where we need to go so that everybody's happy at the end of the day.
Got it. Yeah. It sounds like the life of an entrepreneur, just putting out a lot of fires and having things come up and dealing with that as it comes, right?
Exactly. Yes, for sure.
So you mentioned you have some out-of-state properties and some local. So where do you currently live and where are your properties located?
So I'm in South Carolina. So I have some properties in the Midwest, in Indiana and Illinois. And then I have some properties in South Carolina and then some in Alabama and Arkansas. So, and Oklahoma. So Oklahoma was one that, that was a passive, like I'm a passive investor on that one. So I've never seen that one, but I own a small percentage of that property. So that's 200 unit out in Tulsa, Oklahoma. So yeah, so kind of all over, nothing on the West Coast, but Midwest, the South is the majority. And I love the Southeast. We just sold a multifamily that was in Georgia. I like Georgia, Florida, all those.
So what is your criteria for wanting to get into a certain area or a certain market? Do you have certain things that you look for, or are you pretty open as long as the
Yeah.
numbers work?
Well, uh, numbers can be deceiving, and that's the tricky part of knowing, is this a good deal? Because it can look great on paper, but yeah, if it's in a crime ridden area, if it's in an area that's shrinking, the population's all moving out of it. The numbers might look good today, but they won't in 5 years, And so I'm usually looking for properties that are in the path of progress, that have had, um, more population growth over the last 10 years, just common sense things, things that are places people are wanting to move, and wanting to live. If they've got good businesses around, a lot of jobs, especially with the multifamily. Self-storage is a little easier in that it doesn't really have to be a tremendous area. I mean, there's self-storage all over the place that are all, it's going to vary on what you can charge, but self-storage, you can be you still need to be picky, but it can be a little less because it's not, as long as people live in the area and there's a big enough demographic and there's not a lot of competition for it. But yeah, that's what I'm looking for, especially with the multifamily for sure.
Got it. And since a lot of your properties are out of state, how often do you find that you're visiting these properties? And do you always have a partner who has boots on the ground, or are you finding that you just have the property manager there and you just have to visit it every once in a while?
Yeah, so a couple of times a year is usual. It's a boots on the ground is really, really imperative. So I usually do have a partner that is close by, or we've hired someone that is there. That because like with everything, I mean, with multifamily, you have property managers, but then with self-storage, you've got managers, but then you also have your like maintenance person that is clearing out your units, that's making sure, all the locks are secure, making sure that the concrete looks good, it's blown off, power washed, everything just looks nice and is keeping it looking good so that when people go to their facility, it's not scary, And so that's what you really need, a good person for that you can rely on, that's quick, that gets back to you. So that is a vital part of my team. So either, usually I have a partner that lives in the area, or we've hired someone that does live in the area that is reporting to us weekly and doing video. And, it's kind of like with our today's technology, you can do a lot through FaceTime, you can do a lot through video conferencing. It's just really, it's not as imperative as like being there once a month or anything I've found. So, and as long as you have people you trust, and that's the thing, like I've had to fire property managers, I've had to switch companies because you get a vibe, you get a gut feeling of this is not adding up, these reports they're not getting things done, tenants aren't happy, and so then you make the hard calls and you change. So you have to do that too.
Got it. Now, looking back on your real estate journey, is there anything that you would have done differently? And what is the biggest piece of advice you'd give someone who's new to the industry and wants to get into multifamily or self-storage today?
Oh, that's great. I would say, a lot of it is everybody talks about mindset, but a lot is what's going on in your brain. If you think you can do this, if you think you can take these kinds of properties down. So like surrounding yourself with people that have the same passion, have the same drive as you do, and want the same things is really key, because your stamina is going to run out. Your enthusiasm is going to run out. It's really discouraging. Especially when I was first starting, I was doing cold calling. I was direct to sellers trying to find, and that is how I found my first property. And it's like, you get shot down so much, and you need somebody that's like, that's normal. That's okay. You're doing fine. Keep going. Keep plugging. And I just think that is really, really important. And that's why, like, I have a Facebook group, Miss Multifamily, where it's just like, get encouragement, be on networking calls, be on free. There's plenty of free stuff. There's paid stuff as well, but you can really, when you're starting, like you can really find a lot of education just by listening to your podcast, listening to, all these things that are out there and available to kind of just get you motivated. And then once you're really like, okay, I am going to do this, then find that education piece that you need. And that's, there's a lot of, different courses out there. I did one that was great. And, I'm partial to that one, but there's a lot. It's great.
Absolutely. Yeah, I think it's key to have some kind of a mentor to show you along the way, some kind of accountability, a group to really push you forward. I think that's key for any industry. It doesn't matter if you're in real estate or any other type of business, but having that community kind of motivates you and keeps moving forward rather than giving up, when you're 6 months in because you've tried so hard. And it does take a while to get your first deal. It's not the same as single family where you can find deals a lot quicker, right?
Right,
Commercial,
right. I
it can take
know that
you.
expectation of it's like, I mean, if you do 1 to 2 deals a year, like that's a lot. Like that. I mean, it's
Mhm.
like these are huge multi-million dollar deals. And so it's not like, I mean, you'd have to close, 20 to 30 homes to do similar, it's like, so you can put, and that's why it's a perseverance game because you only need 1 or 2 deals a year to really make what you need to do. So, to happen. And then it kind of snowballs and it gets bigger and
Mhm.
bigger. But yeah, it's a lot. So yes, I agree. I agree.
Absolutely.
Find
Yeah,
your group.
exactly. Yeah. First deal is the hardest. Once you get that one out of the way, like you said, yours took 9 months. Everyone, it could take 12 months. It could even take longer than that. But as long as you keep persevering, moving forward, and don't give up. Thanks for being on the show today. So you mentioned your multifamily Facebook group. I'll include a link to that in the show notes. Where else can people find you online if they want to connect with you and learn more about you?
Yeah, sure. So I'm on Instagram as Crystal DeBoer and I'm on Facebook. You can find me on there, Crystal Smith DeBoer. I do run a Facebook group, Miss Multifamily, and I help with My First Million in Multifamily Deal Room. So if you're interested in any of those, reach out to me and I can help you figure out how to plug in.
Awesome. All right. And thank everyone for tuning in today. If you guys enjoyed today's show, please write us a 5-star review on Apple Podcasts or Spotify. Every review helps us to reach more and more people that are looking to get involved in commercial real estate. Today's show was sponsored by Synergy Capital Investments. To download your free multifamily investment guide for beginners or to schedule a call to learn about our upcoming investment projects, go to thrivewithsynergy.com. That's thrivewithsynergy.com or click on the link below.